Hey everyone, welcome back to Corporate Decoder, the place where we unwrap the mysteries of corporate filings, and today folks we've got a real nail biter on our hands. We're diving into Abpro Holdings Incorporated's latest announcement, and let me tell you, it is a doozy. It looks like Abpro is facing a pretty serious challenge with keeping its shares listed on the Nasdaq. We'll break down exactly what that means, what could happen next, and how it might impact you if you own Abpro stock or their warrants. Before we jump in, if you love getting these straight to the point explanations of important corporate news, make sure you are subscribed to the channel. And hey, we've also got a fantastic community over on Discord where we discuss these filings further. Check out the link in the description below. So, what is the big news? Abpro Holdings Incorporated, or ABP as you might know it on the stock market, has received some rather grim news from the Nasdaq hearings panel. Essentially, the Nasdaq wants to delist Abpro's securities. This all stems from the company not meeting a specific requirement related to its equity. Think of equity as the company's net worth, the value it has after all its debts are paid. Nasdaq has rules about how much equity a company needs to maintain to stay listed on their exchange, and unfortunately, Abpro has fallen short of those specific terms. The official notification came on the 18th of February 2026. The panel's previous decision was that Abpro needed to show it had met this minimum equity standard by the 16th of February 2026. Since that didn't happen, the panel has decided to delist the company's securities. This means that trading of Abpro's common stock, ticker symbol ABP, and their warrants, ticker symbol ABPWW, will be suspended. This suspension is set to begin at the opening of trading on the 23rd of February 2026. So if you are holding these, that is the date to mark on your calendar. Now, it is not necessarily over yet for Abpro. They have a window of 15 days from when they receive this notification to ask for a review of the decision. The filing states that Abpro expects to appeal this ruling. This is a pretty common move when a company faces delisting. They'll try every avenue to try and stay on a major exchange. If the appeal doesn't go their way, or if Abpro chooses not to appeal, Nasdaq will file a form with the Securities and Exchange Commission, or SEC, to officially delist the securities. What happens then? Well, after trading stops on Nasdaq, the company expects its common stock and public warrants to be available for trading on what is called the OTC Pink market. You might know this as OVER, the counter trading, or the pink sheets. Now, this is a significant downgrade. Trading on the OTC Pink market is very different from trading on a major exchange like Nasdaq. The filing itself warns about this, stating that trading on the OTC Pink market might have limited information, less transparency, lower liquidity, and definitely more volatility. In simpler terms, it can be harder to buy or sell shares, prices can swing wildly, and it is generally a more risky environment for investors. The company also can't guarantee that any brokerage firm will actively trade their shares on this market. Let's look at what is actually registered on Nasdaq. Abpro has its shares of common stock, par value $0.0001, per S-Hair, trading under the symbol ABP. They also have warrants, each whole warrant exercisable for one share of common stock at an exercise price of $114.9, trading under the symbol ABPW. So both of these are facing potential delisting. The filing also notes that Abpro is considered an emerging growth company. This designation often means they can follow some different rules and regulations compared to larger, more established companies, especially when it comes to financial reporting. This status can provide some flexibility. This really highlights the precarious position Abpro is in. The fact that they couldn't meet the equity requirements to stay on Nasdaq is a strong signal about their financial health. While the appeal process could offer a lifeline, the warning about their move to the OTC Pink market is a clear indication of caution for any current or potential investors. Looking at the broader picture, companies that get delisted often face significant challenges in regaining investor confidence and access to capital. Moving to the OTC market can make it much harder to raise funds for future growth or operations. It also suggests that the company may be struggling financially. As meeting exchange listing requirements is a fundamental aspect of being a publicly traded entity, for investors it means navigating a less regulated and potentially more volatile trading environment. So, what is our take on this? Abpro Holdings Incorporated is facing a critical juncture. The delisting from Nasdaq is a major setback, signaling underlying financial difficulties. While an appeal is possible, the move to the OTC Pink market presents significant risks for investors regarding liquidity, transparency, and price stability. The company's ability to recover and regain trust will heavily depend on its success in appealing the decision and demonstrating a clear path to financial stability. The risk of delisting is a substantial one, and it is crucial for investors to pay close attention to subsequent announcements and the company's operational performance moving forward. Alright, That is our breakdown of Abpro Holdings Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.